Okay, so I decided to discuss the rules for acceptance in this I'm not sure if it's the last video, but part 3. And just sort of think about the things we need to think about before accepting an audit engagement. And so let's talk first of all about the preconditions for an audit. So this is just an audit in particular. Our focus is on the audit for now. And so preconditions really are prerequisites. What are the necessities? What are the essentials even before we talk about an audit? An audit is a special type of engagement. And because we know we're dealing with an audit, we know clearly what the benchmarks will be, because that's what an audit is fundamentally saying. We're saying that the figures you're showing in your financial statements are in line or aligned or are referenced to the financial reporting standards. And we have benchmarks to work with. So we're asking the first question, have you used these benchmarks? Are these aligned with these benchmarks? Or are these some random sort of figures you've put together? The next point, of course, is the question of internal control, because we take a risk-based approach and we understand and argue that, first of all, we must have controls in place because we will carry out some process of we will be sampling, so we don't have a chance to test everything. So we want to ensure that the internal controls are in place and we have documented those, or we can see clear documentation or evidence of those controls in place. And of course, you have given us access to all the information we need to be able to carry out our work. And so the general argument is, if there are any limitations on these preconditions, we cannot accept the engagement. This applies as well if we're continuing with the audit. We want to make sure that these are very much in place, and we look again. So literally every single year we look at the engagement letter and renew that engagement letter, because again, like I say, scope might have changed, the number of issues there, and if there are any significant issues, any disagreements, we need to know that we have cleared those up. Otherwise, we might consider resigning. Professional clearance really is a subtle point. Really, the argument here is that we want to go back to as we are all professional, we want to go back to the previous auditors, unless you never had one, and sort of ask, if you like, if everything was okay, did they leave in peace, were there any issues, and we want to try and reach them. That's really the point. We can continue the work without having heard from them, but we want to, for ethical and professional reasons, sort of understand if there are any reasons why we should not take the appointment, and then make a decision, if you like. So we want to, of course, the clients will typically say, yes, you may contact them. We have a disagreement about fees or whatever it is. But if the client specifically argues that you should, if it specifically refuses permission, if you like, the new firm, the existing firm must ask the client for permission to respond to the prospective firm, and if the client refuses permission, the existing firm should notify the prospective firm of this fact. So again, like I say, because we're all professional, we should be connecting and talking, so we're aware if there are any inherent risks when dealing with the new client. We discussed this a lot, to be fair, in terms of objectivity, self-review, conflict of interest. It's really important to make sure that we can be independent and we can be objective. I talked about the Coca-Cola Pepsi case, self-interest issues, holding of shares in this business, familiarity, related party relationships. We want to make sure that these are not in the way, so that we can actually offer an objective assessment of the audit. Of course, there's a question here of the management, lacking integrity, and maybe they've been in the news for something quite, whatever. Maybe the directors have been disqualified, and if you feel that this isn't the right thing, you should be thinking about not taking on the job. Money laundering, of course, if there is any suspicion of money laundering or actual money laundering by your prospective client, the firm cannot accept the engagement. So this is about knowing straight away, right from the beginning, that there are issues involved. And of course, again, this is about you looking internally. So think of it almost like a SWOT analysis. You're looking at your strengths, whether or not you have the opportunity, you have the resources and the time, if you like, to carry out this audit. And again, control risks. If you feel that there's just too many risks, a cash business, too many inherent risks that you feel that there's a high risk of issuing an inappropriate report. Really, the argument is you would probably need to then just carry out all substantive testing to do with those areas where there is just no way of being able to rely on the controls because they're so erratic. It'd be impossible. We've talked about fees already, of course, and the self-interest threat of fees earlier on. And of course, we can only take this job if we have the professional competence. We're able to do so, and of course, to think about the reputation of the client. So the engagement letter, of course, has to be very clear, stating exactly what it is we intend to see on the what the contract is. Remember, this is a legal document. Clear about what the scope is, what are to prevent any misunderstanding. It sets out the terms and conditions, if you like. So very clearly about the scope, our responsibilities as auditors, your responsibilities as management, very clear on what framework we're going to be abiding by, what the form and what the nature of the engagement is. We're going to be offering a true and fair view of the opinion. And we should, again, like I say, every year we should think about this. Of course, we want to be clear if there are any. Some of the examples of these changes, like I said earlier on, is scope, maybe a change in senior management, a change in ownership. These are all very good, important reasons to consider why there must be a change in scope, a change in partners, and who might be wanting to do a change in pricing as well. Yeah, and I think that's kind of if you're dealing with a group, one letter is typically enough. To all the different parts of the group, and this is if you like, on for the firm that's leaving. Really, you should. I remember a job I did where we just literally got this thin balance sheet from the outgoing firm, and almost had to literally do an audit of all the opening balances just because we had to test those. And typically, we would have had last year's folder to sort of test the opening balances because that's, of course, feeds into the closing balances, doesn't it? So really, we hope that the outgoing firm should provide the new accountant with all the reasonable transfer information that the new accountant requests, free of charge. And typically, in that professional capacity, that's how it does work. So typically in an exam, what you get is you get knowledge questions. What do you put in an engagement letter? What goes in the tender proposal? What do you think about before accepting an engagement? And we've sort of looked at that. But I wouldn't say the requirements look too similar, but you could see that definitely what we put into tender proposal, we're almost trying to sell ourselves and trying to understand what they want and what we can offer, as we saw earlier on in the chapter. And the engagement letter is, now that there's an agreement, the scope and responsibilities and that sort of thing, making sure everyone's clear about their responsibilities and the fees and the liability caps and things like that. And of course, the matters to accept, so everything from pre-issuance and fees and professional clearance, if you like, and whether or not we're able to, professional due care, competence and due care, things like that. These are all the things we want to think about before accepting, to see whether or not we can actually carry out the work. Yeah, and so this is really the principle is the same for most engagements, to see whether or not we can again do it. Again, like I've highlighted earlier on, we want to talk, especially in the tender proposal, we want to highlight why we can do the work, that we can inform the client that we are able to do this, to do the work, and we have the capacity to cover the different areas as they require. And we've talked again about the engagement letter, the aim to minimize misunderstandings, if you like, and all the things that we should find in there. Cool, great stuff. That nicely brings us to the end of chapter 6.